first takeaway is that Infosys management is maintaining its outlook despite the macro concerns. So the FY23 revenue guidance stays pat at 14 to 16% in constant currency terms, while margins will be at the lower end of 21 to 23% range, something that the management had guided in July itself. So it's a status quo when it comes to the FY23 guidance. Now let's move on to the demand environment, which is where there are a lot of concerns given the fears of recession in US and Europe. The key takeaway from the Infosys management is that they've highlighted some weakness in two segments. One of them is the mortgage business due to rising interest rates, and secondly, in the retail vertical due to high global inflation. Again, remember, this should not come as a surprise. In the Q1 conference call, Salil Parekh had said, and I quote over here, "We do see pockets of weakness, for example, in the area of mortgage, in the financial services. We keep a close watch on the evolving macro environment in terms of the changes to the pipeline." CFO Nilanjan Roy also echoed the same thing, and he said in the conference call, "We are seeing some slowness in the mortgage industry and the lending business due to increased interest rates. We remain watchful of the impact of emerging global developments on budgets for clients." Despite these cautionary statements made by the management in Q1 as well as in the recent conferences, the management continues to reiterate the demand and the deal pipeline has not been impacted. They say that growth remains broad-based, with the pipeline for large deals higher than what it was a couple of months ago. Where they have highlighted some concerns is there is some slowness which is there in the decision-making cycle at certain specific clients, and certain clients are looking at cost takeout projects to now fund their digital and cloud initiatives. But the long-term picture still continues to be very intact. The worry is what happens to the demand. Today it's intact, but what about next year onwards? Is there a risk to next year's tech budget? Here, let me pick out an extract from a CLSA note which said that macro risk could pose challenges to clients' calendar year 23 IT budgets, but the process is yet to start. Conversations with clients thus far have indicated that they're unlikely to reverse their long-term digital investment plans in a recessionary environment, though the pace could slacken. So there is some caution which is emerging on that front. Now let's move on and talk about the picture on margins and the supply side. Well, Infosys, as I started off saying, said that they're holding on to their margin guidance. What they've also said is that there are sufficient levers for margins to improve from the lows that it had in Q1 FY23, which is 20.1%. They said discussions are still going on for higher pricing and attrition has moderated but still remains very high.